Western Alliance Bancorporation stock has been crushed in the past year due to the regional banking crisis. But is the bank a deep value play, or is its stock a value trap? Let's try to find out. We're analyzing Western Alliance Bancorporation, stock ticker BAL, to see if its market price is a fair value. We're using the 10 Towers banking analysis to look at the most telling financial metrics before estimating an intrinsic value for Western Alliance. Then we're giving a final rating to the business. There will be two key bonus metrics along the way that just might be the tipping points when analyzing Western Alliance for your stock portfolio. Before getting into these valuable metrics, let's understand Western Alliance stock performance. Right now, Western Alliance trades for $35.43 per share. That's a huge haircut from their $67 52-week high, although the company is up more than $25 from their 52-week low. The company briefly traded as low as $7.50. In the last year, their stock price is down 52%. The company does pay a 3.8% dividend yield, but their stock price is still cut in half. In the last 5 years, Western Alliance is down 39% overall. In the last 10 years, however, their stock price is up nearly 8% annually. Going back prior to the global financial crisis, over the last nearly 18 years, Western Alliance's stock price is up 12% overall. That's about half a percentage point compounded annually. They're up quite a bit from their lows during the global financial crisis, but that may not mean a lot if their equity and debt holders get wiped out due to a bank failure. Right now, 11% of their shares outstanding are sold short. The company has about a $4 billion market cap. In their last 5 years, they've traded for an average market cap of about $6.7 billion. The company recently announced plans to sell $2.6 billion worth of real estate loans. They're using this to divest non-core assets to focus on their core business as they're building up Set1 capital. Western Alliance Bancorporation is a Phoenix, Arizona-based holding company with regional banks operating in Nevada, Arizona, and California. The bank offers retail banking services and focuses on mortgages for retail consumers and commercial loans, mainly for real estate. The bank also has an investment advisory business that manages investment portfolios for Western clients and clients of other banks. Starting with tower number 1, we want their average PE in the last 5 years to be below 12.5 times. This is about the historical average for the banking sector. Western Alliance's PE has been all over the place here. They've traded as high as 21.5 times earnings in spring of 2021, and recently they traded for under 2 times earnings as a potential zero was on the board. Right now, the company trades for 4 times earnings, and in the last 5 years, they've traded for an average of just under 11 times earnings. This is just sneaking in here, and this is a check on metric number 1. Metric number 2, we want their average 5-year return on equity to be greater than 9%. During all of the last 5 years, Western Alliance earns pretty stable returns on equity. They've been above average in all 5 of these years, and they were very high in 2020, even with the impact to the global economy in 2020. Over this time, Western Alliance earns about 18.7% returns on equity in a given year. This is a check on tower number 2. Tower number 3, we're looking for revenue growth in the last 5 years. During this time, Western Alliance has grown their revenues from $900 million in 2018 to about $2.5 billion in 2022. Their revenues are up nearly 2.5 times. This is another check on tower number 3. Tower number 4, we're looking for net income growth in the last 5 years for Western Alliance. Their net incomes have more than doubled during this time, up from $436 million in 2018. In their most recent fiscal year, they've earned more than $1 billion. This is another check on tower number 4. We're perfect starting off here for Western Alliance. And in an average year during this time, Western Alliance earns about $680 million. We'll come back to that number when we try to calculate a fair value for the business, so put that in the bank for now. Metric number 5 is where we start to see potential for trouble for Western Alliance. In the last 5 years, their deposits have more than doubled. Huge deposit growth like this is a double-edged sword for a bank. It depends on the bank's opportunity set in terms of how they can invest their deposits. Banks' balance sheets are inverted compared to usual companies. Their deposits are liabilities, while their loans are their assets. While this is a check here, this is something you need to be careful of and one of the main causes for concern for Western Alliance. Thankfully, in one of our bonuses, we'll look to see if this deposit growth could have caused issues for Western Alliance. In fact, we'll be looking at one of the major red flags. That was how you could have spotted Silicon Valley Bank or First Republic before their failures. You don't want to miss that as you're researching Western Alliance. Metric number 6, we're looking for decreasing shares outstanding in the last 5 years. A well-run bank will need an outlet for its excess capital. They have options to return capital to shareholders or grow through acquisitions. It doesn't look like Western Alliance has done this through share buybacks, as they've been diluting existing shareholders, and this is an X on metric number 6. This shareholder dilution and why they did it is also something to dig in and learn more about. Tower number 7, we want their interest on deposits as a percentage of total deposits to be decreasing in the last 5 years. With recent rate increases, this may not be the case. We still want to be on the lookout though. During this time, even though Western Alliance has more than doubled their deposits, the percentage of interest they're paying on deposits has increased. This has grown from 0.6% in 2018 to 0.89% today. Again, even with their huge deposit growth, this is an X on tower number 7 and something to watch out for. Tower number 8, we want their non-interest expenses as a percentage of total deposits to be decreasing in the last 5 years. This is a key operational metric for a bank. It's a more conservative way of calculating a bank's efficiency ratio. In 2018, non-interest expenses made up 2.2% of total deposits. This has dropped slightly to making up 2.1% of total deposits today. This is a check here on tower number 8. With their very large deposit growth, their non-interest expenses have increased, but the bank is slightly more efficient on a per deposit basis. As our first bonus, we're looking at Western Alliance dividend profile. Right now, Western Alliance pays a 3.8% dividend yield. They started paying a dividend in 2019 and they've grown this since then. This is the primary way the bank has returned capital to shareholders. During this time, Western Alliance's earnings have easily supported their dividend yield, and the company's maintained a very low dividend payout ratio. They've grown their earnings per share and they've grown their dividends in all of these years. While this is a snapshot of their last 5 years of performance and no guarantee for the future, this looks like a good sign for the business. Tower number 9, we want their institutional deposits as a percentage of total deposits to be as close to zero as possible. This should also be decreasing. Simply put, it's easier for institutional deposits to leave a bank than it is for retail funded deposits. It also potentially exposes a bank to more counterparty risk. In 2018, Western Alliance's institutional deposits made up 8.5% of their deposit base. The company has both grown their institutional funding and they've grown their total deposits. Their total deposits are outpacing this, however, and right now 7% of their deposits are funded by institutional deposits. While this is technically a check, this is something to be careful of, as we want this to be as close to zero as possible. This metric can vary country to country and bank to bank, but it is something to be very mindful of as a United States regulated bank. The big tower of them all, tower number 10, we want their average 5-year earnings multiplied by 10 to be greater than their market cap. If this is the case, this could help tell us if the business is cheap or not. Right now, Western Alliance has about a $4 billion market cap. Averaged out in the last 5 years, their market cap is about $6.6 billion. They traded for as high as just under $12.7 billion and as low as $2 billion recently. In the last 5 years, we learned the company earns about $680 million in an average year. When we multiply that by 10, that gives us about a $6.8 billion fair value for Western Alliance. That's both above where the company trades currently and it's above their average market cap throughout this time. This is a check here on tower number 10. Just because this is the case doesn't mean you run out and go buy the business. This is not financial advice. You don't want to miss out on this next crucial safety metric. This second bonus is one of the ways you could have spotted the failures of First Republic or Silicon Valley Bank ahead of time. We want Western Alliance's 10-year median returns on equity to be greater than their 10-year CAGR on their earning assets and their deposits. If this isn't the case, this is a potential big red flag for the company. Western Alliance's 10-year median returns on equity were just under 16%. At the same time, they've grown their earning assets at a 24.3% CAGR, and their deposits have grown at a 23.6% CAGR. This is a big issue for the bank, as this is likely not sustainable in the long run. This is an X here on our bonus, and this is one of the same issues that Silicon Valley Bank and First Republic were facing. This is not the end-all be-all when looking at a bank. It means that you truly need to be an expert to dig in and understand this company, as there's pronounced risk for Western Alliance. Also, what doesn't look good for the company is their returns on equity throughout the global financial crisis. Western Alliance's business was hit extremely hard in 2008 and 2009. They had negative returns on equity for 3 years, and that was very poor performance for the bank. While they held up a little bit better in the 2020 crisis, again, that's not a great sign here for Western Alliance. Now it's time for our final rating. In analyzing Western Alliance Bancorporation, stock ticker WAL, we learned the company has grown a lot in the last 5 years, which could be a big issue for the company. The company earns higher average returns on equity. They've grown their revenues and they've grown their net incomes. They've grown their balance sheet, growing their earning assets and their deposits at a rate that's much higher than their returns on equity. This is a big problem for the company. While the company potentially looks cheap relative to their earnings and they've supported a dividend, you want to use extra caution with Western Alliance. It's worth reiterating this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with certified legal and financial professionals before making any investment decision. Combining the factors of our analysis, Western Alliance looks like a poor candidate in terms of its attractiveness for research. This is a situation you'd really want to be a banking expert to understand or have some sort of contrarian insight into. While it potentially looks cheap, there's a very real risk that's not present in all banks for Western Alliance. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to look at next time. Thanks for learning about Western Alliance with me, and have a great day.